Welcome to another episode of Badass Banking. And today I'm in Virginia and I'm joined with Rahm McDaniel, who is in Austin today.
Austin. I'm at home in Austin.
Austin. And you are the VP of Strategic Solutions at Q2 with an emphasis, according to the shirt, on open. So what the hell is that?
Well, I wore the t-shirt. I wore my black t-shirt today to emphasize what a badass I am for badass banking. But
yeah.
So Q2
that's why I'm wearing a blue polo, because there's nothing more badass than a blue polo.
That's high level stuff. Get out your baseball bats. No, Q2 Open is Q2's banking as a service group. So actually, this t-shirt is out of brand, I think, but Q2 Open is Q2's banking as a service group. So Q2 has a pretty broad portfolio. We don't have multiple products in any segment, but we covered the end-to-end spectrum of both sides of the balance sheet. We started with a digital servicing product, which was small medium business consumer, and then we made some acquisitions. We got Centrix to handle on the red tech side. We built a commercial / corporate banking product. We acquired Precision Lender and Cloud Lending, which allows us to get servicing. So now we can buy, sell money. But every other part of our business really deals with aggregating existing data systems that are the infrastructure of the bank. I think one of the things we realized in about 2015 was that fintechs were growing fast. And as a mission-driven company that exists to strengthen communities by strengthening the financial institutions that serve them, we had to find a role for the community and regional financial services ecosystem to play in the fintech economy. And in order for that to work, plugging fintechs into 30-year-old banking infrastructure was not going to be a viable model. So we acquired a company called Social Money that was the company that rolled out Smarty Pig, essentially for their IP, and they have it and released a product called CorePro. And CorePro is the first and only purpose-built core processing system for standalone digital-only lines of business. So there's really three things that's for, right? One is banks that want to sort of create their own direct bank or challenge their own brand, right? Second category is banks that want an innovation platform, right? Where they have an existing, they have an idea, but they either can't do it because the technology is too rigid, or they can't do it because the cost model of their sort of existing core system doesn't work. So they bring in CorePro as the system of record for that line of business. And then the third model, where we're really doing the bulk of our deals today, is facilitating the partnership between community banks like NBKC and LSB and MVB with really sort of top tier unicorn, deca unicorn level fintechs like, Credit Karma and Square and Betterment and Acorns. I think that we've had some success with that in part because unlike a lot of the sort of next gen core providers, we're not trying to do bank conversions. Like I see RFPs to do a bank conversion from one full service core to another. Well, the truth is, Q2's banking business already works with 40 odd different core systems, and they're all really good at running a full service bank. That's not what we do. We're here to do the essential functions of compliance, accounting, and transaction processing, and get out of the way of everything else. So that's by the way, that's my pitch. So whatever we talk about for the next 20 minutes is up to you. But
it's a good pitch. It's a good pitch. This is going to be on Spotify, so nobody can see the shirt, but I'm going to do a screen capture so they can see it. That is a good looking shirt. But no, I'm on the same page as you are. I mean, I've always felt, going back to my early days at Gizio, the future of banking the future bank will be a bank one way or another, right? We will probably redefine a bit what banking is, but and it'll always be different things to probably different people, not necessarily just a demographic issue. But fintechs are not the foes. Fintechs are, they know that they want to be part of the retail banking or even wholesale banking ecosystem. Most of the successful fintechs I'm seeing have figured that out. They want to be part of the banking scene per se. And to me, that makes perfect sense. Ultimately, through these partnerships, the real winners are going to be the consumers, business or retail. It doesn't matter. They're going to get better product. They're going to get a more seamless interface. They're going to have less friction. and banking will probably, hopefully, become ever more relevant to them, highly contextual. I put a tweet out today. I got something from Betterment. I don't keep a lot of money there. I think I had like $5,000 or something there. It was more of an experimental thing. Matter of fact, they reminded me I probably need to get it the heck out of there. But they're like, hey, Brian, you ought to prepare for retirement. How you doing with your nest egg? I love the fact that they're pushing out predictive, or they're pushing out content and trying to engage me. But I'm already retired, and if I don't have a nest egg at 59, I am hosed, right? So they've got to figure out a way to personalize these communications so they're relevant and contextual. And Betterment, they're a unicorn. They're doing great, but they just don't get it. There's a disconnect. So you've got an odd advantage, in my opinion, and I know you'll agree. You've only got 7 or 8 years experience in the banking industry per se. So Q2 really rolled the dice by bringing in the outsider, which I think was a brilliant move because you approach things a lot differently. Now, you and I have talked a little about in the past about the issue of customer onboarding or member onboarding. There's often a lack thereof. That's part of the problem. Why is it such a struggle, and what does it say about the culture of banking?
So that's a big question, and if you'll indulge me, I'll sort of put some context around this. So as you said, I've only been in banking for about 7 years, which is it's amazing to say that's only, because that's an eternity in the technology industry.
Yeah.
Right? The first 12 years of my tech career, I was with HP, and then I did a startup for a couple of years, and like bootstrapping being what it is, I had to go get a job, which is how I came to Q2. But the last job I held at Q2, at HP rather, I was the relationship manager between the entertainment industry and HP's PC business, right? So, it was right after the financial crisis, and we were just loading PCs up with whatever we could find that would make us money. And one of the things we had was this partnership with Netflix, which would pay us a bounty to bring them subscribers. You with me so far?
Yep.
So naturally, Blockbuster approaches us too, because about this time they're starting to take Netflix seriously, right? Yep. And so they, come to us, and essentially, I can tell this story now, it's 10 years ago, but they come to us, and essentially their pitch to me was, hey, it's better for your brand if you do with us what you're doing for Netflix, except with us. It's better for your brand to work with us. It's like, well, why is that? And it's like, well, we're creating a much better customer onboarding experience than what you've got, and we're going to do what Netflix does better than Netflix. And I said, how is that? And they said, well, because what people really like about Blockbuster is what we do in store. So we're recreating the store experience for the online environment. And I remember thinking and the economic, of course, we were coin operated, right? So we would have done, don't get me wrong, we would have done it if the deal had worked out. But I remember thinking at the time, I think that Netflix is successful precisely because they are not recreating Blockbuster's in-store experience, right? There's got to be niche, because the success that Netflix has had is proving it. So fast forwarded to get into banking 7 years ago, I remember the interview I had at Q2, and I don't think it was going all that well. And then Scott Abiel, who I think from Q2, is interviewing me, and he kind of goes through this, and I'm not doing all that well at all. And he kind of gets to the part where, in a sort of a perfunctory way, he's like, well, what questions do you have for us? And my question was, why does everything in financial services feel like Amazon in like 2002? Because I was coming from an e-commerce background. There's a menu, and if I know exactly what I'm trying to do, I can do it. But apart from that, this is exactly like walking into an office, except online. And it turned out that was a pretty good question, right? There's like some primary vectors for that. There's the technology banking gets in the way, and there's the cost structure gets in the way. But a lot of the culture of banking really inhibits a better customer onboarding experience, because what I think the biggest, like you and Patrick Sells were talking about this in a different episode about the culture of banking. And I think, he's maybe a little harder on the guys than I would be, but then I sell to these guys, right? So I have to be sympathetic.
He's a lot younger, so he's very bold.
But in any business, I think the biggest enemy to changing your culture are the things you tell yourself about yourself, right? About what's important and what you value.
And if you're really convinced that what your customers value about you is the full service customer experience, when you try to deliver that in an e-commerce environment, you fail because it's way too heavy, right? I think part of why Q2 acquired Grow was because Grow, operates like an e-commerce shopping cart, right? And an e-commerce shopping cart is probably the best model on a go-forward basis for how to onboard a new customer to get somebody to buy a product than to try to sort of, strong arm them into this very comprehensive full service relationship with a person you just met, right? So, putting the technology's challenges aside for a second, because I think they're very important and relevant. I think part of the culture of banking needs to look at the differences between the in-branch experience and the digital banking experience and understand that they are different, and the reasons why they are different is because of the channel they're in. Fintechs are doing what you can only do in a digital environment. They're not doing a lot of things you can do in branch, right? Branches should be focused on things you can only do in branch with a person-to-person interaction. And really the digital experience should be focused on what you can only do in digital, which is, assess the creditworthiness of a person in very short order and provide them with a nearly frictionless, very fast way to become a customer. And if you can't make them a customer fast, then your onboarding experience is bad, right?
Yeah,
so it's a long way to go to answer the question, but I think what it says about bank culture is that bank cultures, and to a certain extent credit unions, although I think credit unions are a little bit out ahead of banks right now with this, is that banks and credit unions seem to still think that what people want in the online environment is a digital version of what they have in branch, and I don't think that's true.
Well, you look at the average bank or credit union website. That's what it looks like. It's just merchandising of the branch. Basically, it's still that menu-driven, linear approach to banking. I mean, the average financial website looks pretty darn bad. It doesn't look much different than it did in 1996.
Well, and look, don't get me wrong. I'm not one of these people that thinks the branch is dying. I don't think that's true. Like,
I'm with you there too.
I think that's like the paperless office, right? I just don't think it'll ever happen. I think the banks and the credit unions that are successful are going to be the ones who figure out what the branch is good for and focus their efforts and make their branches really, really good. Because when nowadays, like, UFCU here in Austin, University Federal Credit Union, is really all about their relationship with the University of Texas. Like, they talk about, I've talked to them before, they talk about the signage they have at the UT baseball stadium. They talk about that as part of the branch, like their sports, their sports endorsements and their relationship to the athletic department and their relationship to the academic scholarships in the nursing school. Like, they talk about that in terms of the branch, and that's really smart, right? But they don't talk about that in terms of online. I think that's smart too.
Yep. Interesting. Yeah, university is a good example. So culture change is really not enough, though, right? That's not going to be enough to transform this industry or allow this industry to survive or thrive.
No, I don't think. I mean, I think culture change is required, but it's not enough. I think that you and I have talked about this before, that the whole idea of like digital transformation being something that you can just do if you orient your head differently. I mean, the fact of the matter is that the existing technology environment is almost impossible to unwind. And I would argue that in many cases, unwinding it is a fruitless kind of endeavor. Like, I don't know that the pain of, and the bigger you get, the harder it gets, but I don't know that the pain of deconverting tens of thousands or 100,000 people from one system that does a thing to another system that does almost the exact same thing. I don't think that's really where the value is in digital transformation. Like, I think the value in digital transformation is letting the stuff that works today continue to work, and then building new things and using those as the engines of your growth direction instead of the stuff that doesn't have a lot of growth attached to it.
Yep. And I think that impacts product strategy too. I mean, it's finding new ways of developing new savings instruments or what is a checking account? Why is a checking account built the way it is today? Why can't it be different? It should have rewards baked in, should have, a bill pay function that's built into it because we use it as a household finance account. That's how it is. It's no longer for writing checks per se. It's how we manage our day-to-day business. I've run into a lot of CEOs over the last 10 years that who've told me, hey, you know what, Brian, we're changing our culture. And then I asked them to define it. Well, we've torn down some walls in the headquarters. It feels like a startup. We've got a foosball table and we even serve beer at lunch. And I'm like, you know what? That's lipstick on a pig. That's not culture. That's just an environmental change of physical space. That's not going to do it. It's a way of thinking that's got to evolve. And that's I think the real challenge. So are you you're pretty bullish on the future of banks, obviously, or the banking industry, and that includes credit unions.
Yeah. I am, and I think that over time, and I'm starting to see this, and Patrick is a good example, and I can think of other examples off the top of my head where a lot of the people who are in this industry, particularly coming from the technology provider side, are seeing banks as an opportunity to put the things they talk about into practice. Because they understand the risk environment, they have a realistic understanding of what banks go through, they know what's broken, and they know who the ecosystem players are, and they've got a good handle on strategies to improve it. A good example of that is Steve Bone at First Entertainment Credit Union, who is the kind of the chief strategy officer, chief innovation officer, similar to Patrick's job at First Entertainment. I think that the future is actually quite bright. I think that fintechs and the relationship and the kind of the merger of fintechs and community bankings in some form is kind of the community bank of the future, whether it's a fintech who is not a chartered institution and really focuses on customer acquisition and customer service, while a bank focuses on the accounting and compliance and money movement parts, or fintechs that buy their own chartered bank. And I can think of a couple banks that fintechs buying banks that we've worked with that are doing that, or banks that are rolling out their own fintech programs. So I contrary to others, I think that people are becoming much more sensitive to the value proposition of each financial service provider. And like you said in the Bankrate article we were talking about earlier before the show started, I think that more and more people are going to start curating their own package of financial services, which only benefits, I think, the aggressive, acquisitive, innovative banks who can find a way to get out of their own way and to not use, cost or timing as an excuse not to do new things or risk, right?
Yeah, I agree. I mean, curating that, for me, it's a pain in the ass. It takes a lot of time and it's a chore, and I don't look forward to doing it, but I feel like I have a sense of control when I can look at Vanguard, Raymond James, my local bank stuff, which I use for my daily stuff, all in one screen. Today, what I'm forced to do is I'm forced to use either a half-baked PFM or Quicken. And I use Quicken right now. I pay, I think, $79 a year for it. So it's an awkward situation.
I'm actually talking to some companies right now. It's interesting you should say that, where their plan is to create sort of a marketplace of financial services, both from chartered institutions that are issuing accounts and non-chartered services providers, insurance companies and lenders and the like, where they would give you the platform that would allow you to curate a loan from here and a deposit account from here and a payment offering from here and an insurance offering from here, and we'll let you pull it together. Because I agree with you. You're right. PFM in and of itself is not nearly enough, we'll say, to actually do that. But I think that's a real opportunity. I think the other opportunity that I'm seeing a lot of, is beyond payments, is hearing about people that are sort of doing real cash management the way that a business should, at both the small business, like sole proprietor, very small business level, or even the consumer level, where you're normalizing and normalizing somebody's cash position by using a combination of credit and cash and timing to pay out their deliverables, and then also managing their budget, which has always been the direction I thought PFM would go. But then I think I realized later on that you can't really do that unless you can also put together the product offering in the same place.
Yep. So one last question.
Maybe
What's
you.
that?
I said, hopefully somebody will do that. Maybe you.
Yeah. Hey, maybe could be both of us. You never know.
Sure, who knows?
One last question: do you have a favorite fintech du jour or of the year?
Gosh, it would definitely be one of our customers.
Nothing
But
wrong with that.
you know, right now it's a toss up. You know, you don't want to play favorite with your kids, but right now for me it's a toss up between Betterment and Credit Karma for different reasons. I think Credit Karma is giving people, and for reasons having nothing to do with what we do with them, right?
Yep.
Credit Karma, I think, has really democratized and put people in charge of their own equity in the sort of credit system, I think. And that's very important, right? I think for a long time that was something that people were separated from and locked out of. It's a good example of a fintech doing something that only a fintech can do, right? And you can only do in a digital environment. Betterment, I like because they're doing something that you also could not do in a human-to-human environment, which is, as far as I know, cost effectively serve an investor that is investing with very small dollars and very small increments at a time.
Yeah.
So it's a great, and this is true for Acorns too, right? I don't mean to play favorites. I just happen to be a Betterment customer, right?
Yeah.
So I like both of them for the same reason fundamentally, which is that they are democratizing something that was not broadly available to other people before, and putting consumers, I think, very much in charge of their own destiny.
Yep.
But then also doing it in a responsible way where they're not left completely alone. They're not just handing them the reins and saying, here you go, but they're actually giving them some guidance and some tools in a well-delivered way that allows them to be smart and to be empowered and to, you know, change their own lives with some assistance. And to me, that's the best use for technology possible.
I will say this about Betterment. So I'm in my account right now, just looking at it, and it's not 5,000 I have, it's 20,000. So that's a surprise. Right. Yeah, that's a surprise. But I do recall now I transferred $5,000 from the Build Wealth, they call it the Build Wealth account, all right, which is in their version of an index fund in essence, right? Or a mutual fund, I'll call it, not necessarily index. And then I picked my tolerance to risk, and I went aggressive with it. I actually made some money, but I put money into the checking account with the plan of transferring it out. Never really did it. But what I like is all the planning tools that they have built in there and the prompts. They nudge you to keep planning. They nudge you to build your safety net. And now they've got the Betterment checking account, which is a pretty good checking account.
So this is what I mean about dependency, by the way, and having infrastructure that accommodates you by only doing a few things. So we're the core provider for that checking account. This isn't a big secret, right? I don't mind if this gets out. In terms of functionality, they didn't rely on us to build any of that.
Yeah, they don't need to.
You know what I mean? Like, this is what I'm talking about. Like, this is not the kind of thing where the financial services company, and they're doing that through a bank, right? But they didn't have to go back to the core processor and say, build XYZ in order for me to do nudges, right? We just gave them an appropriate level of control over the product infrastructure, and they built the things that only they know how to build, right? Because I mean, you know, innovation, you know, what all innovators have that almost no financial institutions have is the ability to you know, well, to move fast and to move cheaply, which is to say to fail fast and to fail cheaply so that you can iterate over time until you find an avenue to success. I think by not relying on us to build the things that you just talked about for the checking account, that's the best partner we can be to both the bank that powers and issues the accounts and also to Betterment.
Yeah, I'm in their TNC right now. I was looking to see who their behind the scenes bank was. They don't have a bank, they have many banks, and they refer to them as their program banks. You have to dig deeper to see who the program banks are, and among them are 3 of the top 10 banks in the United States. So so they've got a good talent pool that they can tap into when it comes to building these products, and they can find a way to build them even better. Listen, I appreciate your time today. I know you got a lot going on. There's another meeting probably coming up. Any last thoughts?
Thanks for having me on, Brian. I feel like a real badass now.
Now you're a celebrity because you got the badass shirt on.
Right.
Rahm, I appreciate it.
Take care.